Good afternoon, everybody. My name's Rob Stewart. I'm the CEO of Credit Suisse in Australia, and it's my pleasure to moderate the keynote address today from Australia's Minister for Trade and Investment, Mr. Andrew Robb. It's no secret that the Australian economy is at a crossroads. We have a slowing mining sector. Recently, there's been several high-profile industrial restructurings announced. We're seeing rising unemployment and sluggish, below-trend economic growth. Against this backdrop, the new Abbott government is eager to drive foreign investment into Australia and to boost trade opportunities. And the man tasked with this big challenge is Minister Andrew Robb. Mr. Robb was appointed to the Cabinet as Minister for Trade and Investment following the Liberal National Party coalition victory at last September's federal election. Mr. Robb is an agricultural economist by training and has had a distinguished career in business and in politics as the Federal Director of the Liberal Party, amongst a number of other roles, prior to entering Parliament in 2004. With that background, he's very well qualified to lead the agenda that Prime Minister Tony Abbott announced when the coalition was elected. The Prime Minister committed his government to demonstrating to investors, both foreign and domestic, that Australia is under new management and is open for business. As part of that agenda, the government created the new portfolio and pledged to address the sovereign risk issue. That portfolio is the new trade and investment portfolio that the Minister is leading. In today's keynote, Mr. Robb may shed some light on the discussions of a free trade agreement between Australia and China, the potential for improved cooperation between Australia and Japan. He will also be able to share some fascinating insights into what lays ahead for the Australian economy, but most importantly, the initiatives that the government is pursuing to ensure that Australia is open for business. Can you please join me in welcoming Andrew Robb to the AIC?
Thanks, Rob. Well, thanks very much, Rob, and many thanks to Credit Suisse for providing this important opportunity to give you some sense of the tram tracks, if you like, that the new government in Australia since last September is attempting to follow. It gives me a great opportunity to sort of fill in the gaps that Rob was mentioning. And a warm welcome to all of you. Thanks for joining this session. Since the first fleet, Australia has been a country unashamedly reliant on foreign investment. And it's helped build our infrastructure, it's grown our businesses, and it provides a quality of life and the enviable standards of living that we enjoy in Australia. As a big and vastly populated continent with a thin domestic capital market, but with great investment opportunities in front of us, our reliance on foreign investment very much continues today. It is integral to the development of our capital-intensive resources and energy projects. It will help us realise the enormous unfulfilled potential in agriculture in what I see as this century of food and water security. It will help us develop Northern Australia, which has so much to offer in support of our continued economic growth. As a new government in Australia, we've got a clear message to global investors. We unambiguously welcome investment from abroad. We are, as Rob said, open for business. Our objective is to create the most stable and conducive environment possible for investment. As an economy, our fundamentals remain strong. We've seen now 22 consecutive years of economic growth and have been one of the strongest performers in the OECD over the past decade. But in recent years, we've faced our own share of challenges. As I've travelled in my role as Trade and Investment Minister in the last 6 months, I must say I've sensed a growing sense of disillusionment with the interventionist big government policy responses to the global financial crisis. The debt-fueled spending adopted by governments globally, Western governments in particular, including our own country, has not delivered sustainable economic growth at a level which is making any inroads to what are unacceptably high levels of unemployment in most of the developed world. I'm noticing a new appetite in many countries to pursue trade and investment as the drivers of sustainable economic growth and job creation. In Australia, for the new government, if you like, if there's a very simple construct or framework, it is our central objective. And we've spent 3 years leading up to this last election in the event that we got the privilege of government, 3 years designing a raft of policy to take to office and to give us an agenda if we got there. And I coordinated that policy development process. And I must have said this tagline 1,000 times to colleagues. They come in the room with all their policy proposals. And I'd say our central objective is to displace big government from the centre of economic policy and replace it with robust growth of the private sector. It's a simple proposition, but if you measure every policy against that, no matter whether it's an arts policy or all the way through to more deliberate economic policies, it has quite a marked impact. So we are very much focused on, in that sense, reducing the costs of doing business in Australia and providing, or certainly re-establishing, the level of certainty and stability that has so long been associated with investment in Australia. To restore our reputation, if you like, as the gold standard when it comes to sovereign risk and to be a great place to invest for the long term with confidence. In a sense, to get that, to drive that overarching proposition of getting rid of big spending, highly regulating government from centre stage and replacing it with robust growth of the private sector, we had 4 simple principles which drove those policy developments. First, that we live within our means as a government. Simple proposition, but it's got quite profound implications if you follow it through. Secondly, pursue serious deregulation. And when I say serious, really serious deregulation. Thirdly, to restore a culture of personal responsibility, both for individuals and for corporations. And finally, to back our strengths, the things that we do well as a country, as well as anybody and better than most. Now, it seems an obvious proposition for business people, but having had 30 years in and around politics and having been in business, if things get into trouble, businesses forever, they seek not to contradict their brand strengths. Everyone from the receptionist to the CEO knows not to cut across, to contradict, compromise the strengths of the company, which invariably the brand of the company. Yet in politics, my observation, both in Australia and I've worked in the political sphere in a few countries around the world, including in Asia, the instinct or the final result is so often is for governments to focus on the things that countries are weakest at, because the squeaky wheel works in politics. And for so many countries where you've got a democratic system, the votes are so important. And so there's a majority of time spent on the things that you're not good at. And even as an individual, you should work out what the strengths that you've been born with and make the most of them. Spend your time focusing largely on your strengths. Neutralise your weaknesses, but spend your time on your strengths. It's no different for a country. And we have made a very deliberate attempt to identify those strengths and to make sure that 70 or 80% of our time is applied to making sure that we don't compromise those strengths. We're restoring the government budget back to health after a record build-up of debt and deficit under our predecessors. For the first time in 2 decades, there's a commission of audit to examine the size of government and the quality of spending. That'll be reporting very shortly. We are cutting red and green tape 21,000 new regulations were introduced over the last 6 years. Last week we identified 10,000 that we were going to cut immediately, and yesterday the Parliament had a repeal day where we cut 10,000 regulations that had been building up. Every 6 months we're going to, through the term of this office and however long we're in government, we're going to continue to do this repeal of regulations and reporting requirements and all of those things that are in many ways choking off especially SMEs, but also causing, you know, large erosion of profits even in the bigger companies. We're streamlining project approval processes. LNG project, for instance, compared with 2007, now takes 2 years longer to get an approval through for a large LNG project, $30 or $40 million a month, dead money. We have done a number of things, including outsourcing all of the federal environmental legislation, which was the primary cause for that blowout, making the states and the territories an agent for the Commonwealth with those approval processes. We will, I think, very quickly restore our competitive position, which we've long held in resources and energy. Since taking office, we've granted environmental approval to 125 projects worth $400 billion, not million, $400 billion, some of which have been delayed for up to 6 years. In other words, with the influence of the Greens Party in the previous minority government, we've found that there were many projects which ended up satisfying quite rigorous environmental standards and EISs, but they never got the political tick-off. They got put on the shelf. And we've cleared up, our Environment Minister has approved 125, and we've got major developments opening up as a consequence of that. We're restoring the Australian Building and Construction Commission to boost productivity in the construction industry by tackling rogue union behaviour. As the mining boom starts to taper, there's still plenty left in it, but as it starts to taper, what we've seen that we need to put a lifeline into or bolster construction and other areas of the economy. And the Building and Construction Commission, when we were last in office, we established this body to stop rogue union behaviour in the middle of the resources boom, and we saw a $7 billion a year improvement in productivity because of our ability, or the ability of this authority, to rein in unreasonable union behaviour across so many big projects. We're also taking a series of difficult decisions to end government handouts to struggling enterprises, because it's not the role of government to indefinitely prop up uncompetitive business practices and delay inevitable adjustments. Again, looking at our strengths, not our weaknesses. And they had developed a culture, I think, where a lot of big businesses and directors would have been irresponsible, not if they're doing a major investment, not to go to the government and seek some contribution. It had got that bad. We have knocked back several very totemic issues in the first 6 months, and I think the whole mindset is changing. And it's a very important part of the tram tracks that I talked about at the start. So as a government, we're committed to playing to our strengths rather than propping up industries that have been struggling. And there the stars are aligning in a way for Australia, I think, in the years ahead. A significant report was recently released by Deloitte called Positioning for Prosperity, Catching the Next Wave. A piece of work by 4 quite prominent Australians. And the key insights in this report is that Australia's major strengths, our areas of comparative advantage, align with the major areas of projected global demand and growth in the years ahead, including gas, tourism, agribusiness, health, international education, and wealth management. Resources and energy is our most celebrated strength. The mining boom Australia has enjoyed over the past decade has underpinned our economic growth and helped us get through the global financial crisis, has helped ensure that we've had now nearly 23 years of uninterrupted economic growth. China's industrialisation and urbanisation has driven seemingly insatiable demand for our minerals and energy. While it's true the Australian mining boom is abating somewhat, Don't buy the mythology that it's over. Demand will remain strong in the years ahead, not only from China, but from the likes of India, Japan, Korea, Vietnam and other emerging Asian economies. Consider this, in the next 5 years, Australian energy and resources exports are projected to rise by 48% in the next 5 years. That's around 90 billion in today's money. 120 countries have a smaller GDP than that. To pick one example, LNG, we're already the third biggest exporter worldwide. Yet by next year, all 3 major Gladstone LNG projects in Queensland will be in production. When combined with the developments in offshore LNG in Western Australia, these projects mean that by 2017-2018, Australia could overtake Qatar as the world's biggest LNG exporter. But there's a lot more to play in global LNG, driven by growth in Australia's energy-hungry middle class. Global demand for LNG is estimated to grow 15 million tonnes per year between 2016 and 2025. Every year, another project the size of 15 million tonnes will come on stream, or must come on stream to meet the demand. That's the equivalent of a Gorgon gas project off the northwest shelf of Australia every year coming on stream. The Gorgon project, the $55 billion project, is one I know well. I spent 2 years working for Chevron on one of the early investment teams before I came into the Parliament. That's why I know how important it is, as a government, we ensure that we provide a highly competitive and stable investment environment to restore Australia's reputation as the gold standard when it comes to sovereign risk. No more endless rule changes, no more new taxes that weren't expected in the middle or following decisions that have been taken where you're looking for a 5 or 7 or longer year term payoff and the rules change and the taxes arrive and the ROI gets trashed. These are sorts of things that we're trying to address to restore what has been a magnificent reputation for the last century about investing in Australia from a stability and certainty point of view. Over the next 3 to 5 years, decisions will be made in regard to $250 billion worth of energy investments globally, largely gas. These are decisions that are pending, these are not things that are in the pipeline now. They're decisions that will be taken over the next 3 to 5 years. It involves a number of companies will make these decisions, many companies that have got a strong presence already in Australia. This investment is up for grabs, and Australia can secure more than its fair share if we get ourselves into a very strongly competitive position, restore that sort of comparative position that we've enjoyed for so long. There is in fact a whole raft of mineral and energy resource projects that can continue to help drive the Australian economy in the years and the decades ahead. This includes gas, along with staples of thermal coal, coking coal, iron ore, copper, gold and also uranium. In northern Queensland Galilee Basin, we are on the cusp of seeing the first new mineral province opened in 40 years with thermal coal the focus. Over the next 4 years, China is expected to import more thermal coal than it has in the rest of its history, despite the bad reputation thermal coal's got at the moment. So Australia's resources and energy projects will continue to present strong prospects for investors. Beyond resources and energy, there are many other opportunities for Australia to leverage our strengths to support economic transformation across the Asia-Pacific. China's economy, for instance, is changing. The focus on export and investment has shifted to the domestic consumption of an exploding middle class. In recent decades, China has lifted some 500 million people out of poverty. This is something unprecedented in human history. The Chinese middle class is hurtling towards 1 billion within 20 years. This growth will drive extraordinary consumer demand and open up new opportunities for Australia. This will be, in my view, the century of food and water security, and Australian agriculture has enormous prospects. We have a world-class agricultural sector and an enviable reputation for clean and green produce and healthy produce. Currently, we help feed 60 million people per year directly, and our exports of agricultural technology and services help feed a further 400 million. We should be striving to double these numbers. In 2012, for instance, we exported 90,000 tonnes of red meat to China. In 2013, we exported 265,000 tonnes of red meat to China. Consider the emerging demand for Western milk powder to feed the 18 million plus babies born in China alone, let alone the broader middle-class Asian demand. You may know that our neighbours in New Zealand secured a free trade agreement with China in 2007, largely focused on dairying. Since then, their dairy exports to China have grown by 2.2 billion. Meanwhile, Australia, without a free trade agreement with China, have grown by less than 70 million at the same period. But now an FTA with China seems within our grasp, and anticipating this, we are already seeing substantial Asian investment into the Australian dairy industry. Hong Kong businessman William Hui recently bought United Dairy Power in rural Victoria for $70 million. And Tasmanian Dairy officially opened a world-class $75 million milk powder factory last year in a joint venture with Mitsubishi. Or consider the Mildura Fruit Company. In 2012, they exported 100 containers of citrus to China. Last year it was 500 containers of citrus to China. There is enormous scope for new investment in Australian agriculture, including joint ventures. We're seeing significant new Chinese investment to expand the iconic Ord River irrigation project in Australia's north. There's an estimated 152,000 gigalitres in total surface water runoff in the north. Currently, we only capture 2% of it. If we could capture and use even 6%, we could feed millions more as a food bowl for Asia. Health services and products is another Australian strength. Our state of Tasmania, for instance, grows the poppies that are transformed into about half of the world's supply of opiate-based pain relief. Other Australian services which have developed around our core strengths have a big role to play. Services like engineering, finance and wealth management, architecture, legal and construction. Tourism and event management are our other strengths. Tourism is Australia's biggest service export, worth $25 billion in export income. China is already our biggest tourism market, with 676,000 visitors last year, and it's growing by 18% per annum, creating great new investment opportunities for hotel and resource operators. But at the high value end, we're a high cost country, and we always will be relative to the region. We can get a lot more competitive with our costs, but we're always going to be relatively high. So in all of these areas of strengths that I've enunciated, we're trying to urge investment and business to get to the high value end. So you get to the high margin end and you can get a return on the investment that's necessary to develop these products and services. Education and training is our second largest services export. Already Australia is the third largest destination for tertiary students from Asia. And we now have the opportunity to complement that with education services delivery in market in places like China and India. The opportunity, we now are educating 700,000 international students. There's no reason in 10 years we're not educating 10 million international students. But many of those will be in country with maybe a term, a semester, a year in Australia. But there's many, many different models, both for not just higher education, but for vocational education especially in India. The government has given a great boost to our education links with Asia through the new Colombo plan. It's a scholarship scheme which I'm delighted to say that Hong Kong is one of the pilot locations for the rollout of this plan. The Colombo plan is going to put thousands of young Australians into all the countries in our region to do their studies, their tertiary studies, and to have a program of work for 2 or 3 years beyond that, so that they not only study in other countries around the region, but they get an opportunity to develop a knowledge of how business is done, the cultural issues, to develop friendships and lasting linkages that will lead to very strong prospects and interaction and a business environment which is to the benefit of all our countries. All of these areas offer excellent growth prospects. As a country, we're determined to compete, as I said, at the quality end. Whether it is 6-star tourism experiences or premium quality produce. As a government, we are pursuing a very ambitious trade and investment agenda because That opens up new markets and makes us even more competitive in existing ones. We've already concluded a free trade agreement with Korea. It was a very high quality agreement, and not only has it opened up, liberalised just about every area of agriculture other than rice, it has, or will, when we sign it in 10 days' time, it will provide opportunities for services companies in all sorts of disciplines to establish in their own right in Korea. And knowing from personal experience sometimes the difficulties of trying to blend cultures in professional services firms, etc., this is a great opportunity to, I think, get a real toehold in Asia, and it's the sort of thing we're also looking for out of Japan and China. We are close to concluding an agreement with Japan, and as I mentioned earlier, we're hopeful of concluding an agreement with China this year. These represent our three biggest export markets, making up 51% of our total exports. We're also working to conclude the Trans-Pacific Partnership, TPP, agreement. This involves 12 countries, which represent 40% of global GDP. The opportunities for seamless trade between those 12 countries is enormous, and if we have the right open architecture, it will mean that for many countries in the region, it'll be almost imperative for them to seek to join because of the disadvantage that they will face when 40% of the world's GDP is being more seamlessly interacted amongst those 12 countries. Currently, I'm also in the process of appointing a group of very senior investment specialists, people who have been working at the investment coalface, people who have had 25 years or more experience in those 5 areas of strength, so that we can walk along beside a lot of the major projects and make sure that there are no stumbling blocks at a federal or a state or even a local council level. So many times from my own commercial experience, you can be tripped up by things that should not happen from a regulatory point of view or whatever, if only you could get to the senior people in those organisations. They will be tasked with helping to drive and facilitate inward investment by the private sector into Australia across areas of priority. The key message I'd like to leave with you today, as I said earlier, Australia is very much open for business. We have a range of strengths and investment opportunities that will mesh well with the exploding demand of the Asia Pacific. We are working hard to open up new markets, to trade through free trade agreements and other mechanisms. And as a government, we are committed to providing the best environment possible to invest. The early steps have been taken as a government. The first piece of legislation to get rid of the carbon tax. The second piece of legislation we introduced to get rid of the mining tax. Third piece of legislation to reinstitute the Building and Construction Commission to remove rogue and criminal behaviour from our construction unions. Fourth bit of legislation we introduced was to streamline approval processes across the country for big projects. The first 4 things we did were all dedicated to improving our investment prospects, the attractiveness of doing business in Australia, to take advantage of what we think are many God-given gifts that we've got there, but we've got to make the most of them. Thanks very much.
Thank you, Minister. We've got time for Q&A. There will be 2 microphones in the room. If you could put up your hand, we'll bring a microphone to you and you can ask your questions of the Minister. But I will exercise my prerogative to ask the first question. Minister, you touched on the free trade. Korea is done. Japan and China are in progress. China's been much discussed. It's been around for a while. Can you give everyone a bit of an update as to where that is and maybe just the overall framework you're thinking about?
I'll do my best without laying all my cards on the table. Those 3 agreements, as I said, 51% of our exports, they've all been more or less in the pipeline for 8 years. And they had stalled for all sorts of reasons. The observation I made before about the sort of disillusionment with heavy regulation, the freeing up of economies, it was mainly relevant to the developed world, but I think also a lot of the developing world now sees that unless they they open up their economies in a far more determined way, that they're not going to get the structural adjustment and they're not going to get the opportunities that they need, especially with services. I find across the region that they are moving at such a pace that they've got to get the skill set of their populations up. So it is that there is a sort of political will, I think, that that I feel that's there, and it's a bit like, you know, any deal in business. If you smell that the time is right, you've got to go very hard, because something could happen 6 months down the track and the deal was nothing to do with you, but it just happens. And so there does seem to be, for different reasons, you can see with China, with this new administration, there is an opportunity which I think 2 years ago people didn't anticipate, frankly. They do seem to be very determinedly trying to open up so many areas, especially services and agriculture, because of the food demands. And Japan, with Abe, again, you can see that you know, he's got 3 years grace before he goes to an election. They're desperately in need of adjustment, and I think he understands it. And his ministers, I got the sense immediately after the election when I met some of them that they were seized with what opportunities they could take. And the same with Korea. President Park was looking to complete, you know, some signature involvement in the rest of the world. Has just about to sign with us, has now completed one with Canada. So all of those things have conspired. It's helped us in a way, and I'm going at 100 miles an hour to try and make sure that something else doesn't happen that we haven't anticipated, so the wheels come off. I think we are well placed. There's a political will on both sides, certainly to our advantage, given all the stuff that I've just talked about. And Japan, I hope we're very close. As with all of these, any sort of deal, the hardest part's the last part. So we're going through some hard yards at the moment, but we are close. And the China one, I can't see any reason why we don't finish it this year.
That'll be amazing progress. So, questions?
James Kabarakis from Cannon Group, thank you for your presentation. Something that wasn't in your list of key strengths for Australia was infrastructure. And given the unwillingness or inability of both state and perhaps federal governments to fund infrastructure within Australia, what plans does your government have in place to help foreign investors come across and fund some of those projects?
Okay. Well, you know, infrastructure per se is not something we do as well as anyone and better than most, I suppose. That was the sort of criteria. Yet it's such an important component of capitalising on the strengths that we have got in almost all cases, right? You take tourism, which I think has got the prospect of probably being the fastest growing area of activity. You know, we are basically, and should be, the first preferred long-haul destination out of Asia. It's an overnight, same time zone, fly, sleep, arrive, and lots of different unique experiences. So if we get to the high value end, 5 and 6 star end of everything, whether it's ecotourism or the city experience, then I think tourism has got the potential. But it's infrastructure. You know, I've spent the last 6 months, I've done infrastructure roundtables. I've done a dozen around the 6 countries around the world. Always, I've included several that are part of, you know, major hotels and resorts, groups, etc., big investors in that space, because that infrastructure is so critical to us. And we're starting to see dividends. You know, just yesterday an announcement in Western Australia. We've got some seriously, you know, major investments coming into Australia at that end of the market. So infrastructure for, you know, for the resource projects, which you take Adani, which is a, you know, Indian energy company, was one of those projects where where the environment report had been completed, but it was on the shelf. They got approved. And now in the space of really 3 months, they are now ready to declare that come third quarter, they'll turn the first sod on a $10 billion thermal coal project. And it involves railways to the coast, new ports, you know, and all the rest of it. Now, that's why we're attacking the building and construction area, so that we make sure that when they get to the construction phase, it's as efficient and effective and least cost as possible, and it's not prone to rogue union behaviour, right? So we've got all of these things that government can do, and I've got to try and inspire the investment. There'll be investment from Australia, but inspire a lot of investment from overseas. If we can lay the framework in industrial relations, in certainty of rule changes, removal of major taxes that are uncompetitive taxes, carbon tax, mining tax, we can do all these things. I think there's a great potential, as well with infrastructure, which we've got a major need for. And Tony Abbott, our new Prime Minister, has said whenever he finishes, he wants to be known as the Infrastructure Prime Minister. Right? So that signals the importance of infrastructure in all its forms, whether it's new rail tracks for agribusiness or whatever it might be, in all its forms. It is critical to us, and we are looking at different models of trying to alter the risk and reward equation for businesses that are getting involved, where we might take some of the upfront risk and get paid back when the project matures. Special purpose vehicles, where we can try and encourage some of this retirement funds, superannuation funds in Australia, which stand at 1.3 trillion but invest very little in Australian infrastructure. Try and put them in with brownfield assets from the states and the federal government to, again, alter the risk and reward equation. So, as usual, there's no one answer to a problem, but we are aggressively looking at a cross-section of things we can do to really turbocharge infrastructure development.
You talked a lot about agriculture. You've got a great agricultural background. If people are thinking about the opportunities, particularly in a new free trade world with Australia, where are the best opportunities in agriculture?
Well, through all the temperate regions in agriculture, we've got very well established and significant production. There is huge room to invest in established areas so that we can develop even more and more R&D, water management. You take an area like the northeast of Victoria, which is a highly productive area, been under irrigation for 80, 90 years. In the last 10 years, local, highly technical infrastructure has been introduced, which now sees that whole region growing the same amount of produce with half the amount of water they used 10 years ago. We've got a very good, water pricing policy in Australia. These sorts of, so it's public policy along with R&D and 21st century technology. But on top of that opportunity across all of the areas that have been long established, further consolidation in those areas, a lot of investment in agribusiness, the logistics and all the rest. But then you go to the north of Australia, which I mentioned very briefly. Really, it's almost the top half of Australia. It's the tropical zone, above the Tropic of Capricorn, which is a third of the way up the Queensland coast, if you're familiar with Australia. All the region, right across the country, there's 17 million hectares of arable soil. Most of it at the moment, you can only run cloven-footed animals on it. It's soil that's better than Brazil. Brazil's in the same zone. Brazil has rehabilitated a lot of their soil, but it's better soil than Brazil. 17 million hectares. As I mentioned, the 60% of all the water that falls in Australia falls above the Tropic of Capricorn. It's a tropical zone. The rest of Australia, we're plagued with droughts and uncertain conditions, which you have to accommodate in your business model. In the north, it's regular. It's there every year, and we only capture 2% of it at the moment. If we captured 5 or 6% of it, we could virtually irrigate all of that 17 million hectares. Not that you really would. But it's there for major horticultural projects, major cropping projects, intensive cattle and other projects, but it's high cost area. It's remote, it needs power, you need to capture the water. You don't need the big dams, a lot of technology to divert rivers, ring tanks, all sorts of things that can now be done. You only need the water for the growing season, because next wet season it fills up again, right? So you don't need massive, in the main, you don't need massive reserves of water that are going to evaporate greatly. So there's all this potential, but it's high cost, and it's never been. A lot of people have lost a lot of money over the years because they get stars in their eyes and see the great potential in a physical sense and a technical sense. But now in an economic sense, for the first time with an exploding middle class in our region, we've got the opportunity, if we get to the high value end of production, to make the investment worthwhile. But it'll be big corporate investment. It'll be almost like resource projects in terms of the infrastructure that'll go with it. It will then feed in much of that area. Of course, a lot of our energy and resources comes out of that top half of Australia, but there are many areas across the north of Australia where there are very substantial other resources but are really stranded. You've got to add water and you've got to add power. If you're trying to run it off diesel, it's uncompetitive. Now, if you bring in the big agricultural projects, there'll be biological fuels, there'll be power driven off byproducts of much of the plants that are grown. All of that's starting to happen now. It's really quite exciting. We could double or even more the amount of agricultural production out of Australia if we can just get the vision. And some of it's starting to happen now, but the conditions are there. They're ripe for major investment across the north of Australia. And it's not just agriculture and resources, tropical health and medical research. It's a great strength of ours is medical research and health, to apply it to the tropics, because that's where we're living, and we've got some really expertise starting there. Tourism across the north is already phenomenal, but it'll be much greater, and education relevant to the skill sets across the north. So it's another untapped area in many respects. The top half of Australia, there's 1 million people living in it. And if you go around the tropical zone around the world, 40% of the world's population is in the tropical zone, and we're probably one of very few developed countries in that area. So again, over the next 10, 20, 30 years, there's just spectacular opportunities.
Perhaps if I could ask about foreign investment.
Yes.
And generally in in certain industries in Australia, there is some sensitivity amongst the broader electorate with foreign investment. How is the new government thinking about that? How are you thinking about FIRB? There's sort of some comments that you'd like to make to the group.
Okay. Yeah, good question. From my experience, there's always been sensitivities to foreign investment. Australia's gone through many waves of investment, many investment cycles originating from different countries. I remember in the 1980s, I was running the Farmers Federation, National Farmers Federation, the representative group for Australia's farmers, and there was all of the Japanese investment, and a lot of the expressions of concern that we've witnessed in Australia in recent times about other countries in the region were the same. I went back to look at when our Foreign Investment Review Board was first established, and it was established in the 40s, just a couple of years after the World War II. And I looked at the papers at the time, and there was all the same expressions of selling out the country and all of the rest, all the same things I've heard again this in the last episode. And of course, the irony was that the country that was being pilloried was the United States, that had just basically saved us in the war 2 years before. So my point is, it is human nature almost to resist and to have some certain fears about investment. You know, the US has gone on to be, you know, there's a stock of nearly $700 billion of investment in Australia, our biggest biggest investor. And it's brought enormous development. We've got a quality of life second to none, virtually. And it's all because foreign investment has helped drive those opportunities. So it's, you know, it's quite critical. We've got the UK at about 500 billion, got Japan at 120 billion. Every time if you look at historically, not just with Australia, but anywhere, where there's a strong trading relationship, it invariably leads to a strong investment relationship because of the linkages and the friendships and the understandings and the trust. Basically, life's about trust, whether it's in your own business, your family, or between countries. And it builds the trust. And we're seeing it again in places like China and other developing countries in the region as our trade increases. Korea has gone from strength to strength in an investment sense. That's why with the free trade agreements, we are looking to provide under certain circumstances even greater access as we have with every free trade agreement. And we are open for business and open for business from anyone. We have got a provision with agricultural land that anything above 15 million for a farm has to go through the Foreign Investment Review Board, but only to ensure that it's in the national interest. And 99.999% of projects that have gone to the Foreign Investment Review Board, hundreds and hundreds and hundreds of them over recent years, have all been passed, no matter what the origin was. So I think common sense prevails, and we will, I think, enjoy the benefits of investment from all of our major trading partners in the years ahead. Yes.
Yes, hi.
Thanks.
Anyone who doubts Australia, and there have been a little while because costs have gone crazy and red tape was terrible and unions running amok. But we have to go back to Hawke Keating, which implemented amazing reforms in the space of, I know they're Labour, but they did a great job. And then Howard Costello came and they did 13 years. You probably have the same with Abbott Hockey now. But the question I'd like to ask is, ADM Hockey, who's got all the makings of a brilliant treasurer, tough as nails, as they called, he knocked back ADM's bid. And there was a lot of funfair, Australia's not open business, is it open for business? What really went down there, mate?
Can I see you afterwards? No. Look, it was a very big deal, $3 billion. The grain sector, which has been deregulated with the support of both sides of politics over recent years, and is benefiting enormously from it, I think, already. But the prospect, while that transition is still taking place, of such a large, the second biggest player in the world, coming in and dominating, was seen not to be in our interests. Now, they were granted an opportunity to invest, I think, at least 20, if not 25, I can't recall. And that was, I think, intended as a signal that the timing was wrong, but that there may be another opportunity at some stage. But at the time, it was seen primarily from a competitive point of view that it would cut across some very constructive transition and the build-up of competition that has been taking place in that sector after many years of being under a statutory authority.
Can you explain a bit about the strategy, or what is Australia's strategy with regards to our manufacturing sector and the way that's sort of developed over the past 10 years with closures in refining? Auto's been very public in the news. And how would you incorporate the the approvals of these coal seam gas projects and what that's done to our domestic gas price and how that impacts this high cost environment as well.
Okay. Well, manufacturing. Firstly, just, we've faced a high dollar, and that's been very tough for a lot of industries, but particularly manufacturing, where the margins were not great in the first place for all sorts of reasons. And of course, we've seen now the announcement of the departure of Ford and GMH and Toyota. It is an example, I suppose, of where we've thrown billions and billions of dollars from both sides of politics at trying to preserve a car manufacturing capability. But it's not a strength. It's not something we've got a comparative advantage over. Too small a market. And, we were not going to, they had to hand out again after the election. And we have decided that, we'll help very much transition those workers to other things, but we're not going to keep propping up and keep spending important taxpayers' dollars on things that are not our strengths. Right? Now, having said that, there is a transition in much of manufacturing. We haven't got a cost structure that's going to support, basic assembly and whatever. And that's the problem with the car. Even though the car industry has become more automated and all the rest, it's still fairly basic assembly. And but if you go to high value ends, I've got the biggest mid-tier manufacturing sector on my doorstep in Melbourne, in Moorabbin. And as I visit there, there's a new generation of owners. The old man sort of built the place 40 years ago off the back of car componentry, most of it. And now they're transitioning into areas that are not dissimilar, but they're sort of, but they're export oriented. They're using a lot of older people, the seniors, which is keeping seniors in the workforce, a very big high productivity initiative, which people don't realise, as well as women into the workforce. So there's all sorts of change going on at the high value end, that's my point, and especially around the things that we're good at with medical research, carbon fibre technology, all of these things. And if you go to Geelong, where the car industry was, front and square for decades, they've slowly been getting out of it. There's now 220,000 people there. 1,000 were in the end employed for Ford, and they have moved heavily into education-related services and medical-related services. So that's where our future is. There is a future in manufacturing, but it's at high end because we're a knowledge-based economy. And secondly, on the gas, just to finish quickly, there have been issues at a state level which is affecting our gas price. I know what you're saying. We're looking at what we can do. I just cite the example of Queensland, which has taken advantage of the coal seam gas. There's 37,000 new jobs being created in Queensland. Gladstone, they're opening up in a most outstanding way. And so I think the other states, I think they will get their head around how to pursue the gas. They'll have to, because we've got so much of it, and yet the domestic price is expensive, and we've always had cheap energy. It's been a very important part of our competitive position, and I feel we'll get there in the next year or two.
Great. Well, thank you very much, Minister. Can we show our appreciation, please?